Good morning, everybody, and welcome to Pre-Market News and Views by In the Money Stocks. My name is Nick Santiago. Today is Thursday, May 5th, 2011. There's a lot to cover. Some news coming out of Europe. Looks like the European Central Bank left their key benchmark interest rate unchanged at 1.25%. So that is putting a little bit of pressure on the European markets at the moment. They all are trading lower. But the futures in here are trading down about 5.5 points. It looks like we do have an uptick in the US dollar this morning. Dollar is trading higher by about 9 cents. And I'll just punch up the intraday dollar chart here, and you can see it pretty clearly how you're getting a little bit of a pop. And notice the dollar has been rising steadily since about 3 o'clock in the morning. And we're just about at the highs of the day for the dollar. So the US dollar index trading up about 9-10 cents. You guys have probably that have been watching my videos in the morning now know that when the dollar's up, the market's down. It's pretty much that cut and dry. Now at 8:30 in the morning, we will get initial jobless claims, weekly jobless claims. Tomorrow will be the government job report, unemployment report for the month of April. So that is going to be a very key report. I'm more in the camp thinking that the market may be on pause until that report is released. So that's what I'm thinking today. Today could be a little bit of a slower day. Maybe we'll get some decent action early, and then everybody, most traders will just wait on that job report, most investors, and they'll see what's going to be reported. Now, I have no idea what's going to come out. I know they're looking for around 200,000 jobs. Yesterday, the ADP report was announced. It came in a little weaker than expected. But, you know, who can really believe these reports? I don't know. They're so revised so many times. I really just don't have much faith in them. It's all about how the market reacts. If the market reacts positive to the number, yeah, you could have a little bit of a rally on your hand. The market reacts negative to the number. Maybe you see a decent sell-off in the market. So it's really all about the market's reaction. That's what's important. We could really care less what the government says or anyone else says. Now, it's all about the dollar, in my opinion. The dollar is the driving force behind any move higher or lower in the market. Okay, so let's keep an eye on the dollar, and that's about the extent of it. As we speak, the dollar has dropped a little bit, and all of a sudden you could see the futures moving right back up a little bit. That's all it takes. It just takes the dollar. The dollar is the driving force behind everything here. Since June of 2010, the dollar has declined by about 17%. Now, we do have gold and silver in play today. Let's start with silver since everybody's been looking at it. You've had this big daily chart, tons and tons of volume here, and silver has just dropped right off a cliff. Although it did have an amazing move higher, but has since really fallen. This morning, you're seeing the SLV trade right around this 36.81. It is definitely getting trading lower again, and you know, we'll see where it goes there. It looks like silver will have come into some short-term support around the $36 level if it does get down there. But another big decline for silver this morning. SLV is trading now at 36.84, and I'm just using that as a barometer. Now the GLD has also come in pretty sharply. It is a little bit on the weaker side today. Yesterday GLD closed at $147.73. $147.73. Today it's trading right at $146.95. So again, a little bit weaker there. It has moved up a little bit, but nonetheless, we've had some pretty good declines in gold and silver, and you know, there is a chance that you know, we get more of a correction. If the dollar could strengthen, you know, I think you do get a real correction in gold and silver. However, it's really all about the dollar, and we'll see when the dollar is ready to do that. Right now, if we look at a daily chart of the US dollar index, you'll see that we're definitely overextended to the downside. But when is the dollar going to make any kind of a move? You can see the downtrend below the 200, below the 50, below the 20 moving average. This is a daily chart, and pretty decent breakdowns. And we'll see if this thing can get going. If it could, then I think you get more of a correction in gold, silver, and we'll just have to see how that plays out. Okay, looking things over, we'll have that job number out in about 5 minutes. So remember, that can also move the markets a little bit once the weekly initial claims come out, and that is at 8:30 sharp. Other than that, I think really there's not a whole lot going on today. You want to be a little bit on the cautious side. As for earnings, I'm not seeing anything out there that is earth-shattering. Again, the Asian markets last night were really, I'm only concerning myself with the Shanghai, and that was basically flat. It was up about 7 points. The day before that, it really was crushed. So the Shanghai really put in what we call a pause day in the market. I don't think it will have much effect. Yesterday, you did have some brutal sell-offs in the market. Stocks like Cleveland-Cliffs really was sold off pretty hard. Freeport-McMoRan, which is known as a copper barometer for many, many people, that was sold off very sharply as well. Today, Freeport-McMoRan is gapping down about $1. So again, any uptick in the U.S. dollar index, remember, it probably is a negative for all commodities, regardless of what they are. So I'm just using Freeport-McMoRan and Cleveland-Cliffs because I trade those very, very often. You could also look at U.S. Steel. Weak stock, weak daily chart on U.S. Steel. The U.S. Steel daily chart is just absolutely putrid. In a downtrend, it has broken all support. If you look at the 10-minute chart today, it closed yesterday at 46.80. Today trading at 46.50, 46.55. So moving down a little bit. And this is all a dollar trade. In essence, every trade is an inverse trade to the dollar right now. It doesn't really matter what you're trading. Now, the financial stocks, they've been holding up, but slowly bleeding. So we have to watch the financials. They may give us some clues. But in any case, the jobless claims report is coming out, weekly initial jobless claims, I should say, at 8:30, and that could be a little bit of a market mover. But overall, I'm looking for somewhat of a little bit of a flat day or a pause type day, and we'll see how the market goes from there. I wouldn't think that the market will be too volatile ahead of tomorrow's key job report. Now, the last few job reports that were released, monthly job reports, have been really non-events. It's really been all about the dollar. So a weak job report may actually be good for the stock market if the dollar moves down. So I know, as weird as that sounds, the last few reports have been coming in right on the money from what analysts have been predicting. But this one, is going to be a little bit highly followed because we're so long in the tooth here with this QE2, and quantitative easing is expected to end in June. Has the Fed created good results as far as job creation? And people may be looking at that. But right now, I'm not seeing a whole lot there. We'll see what the market does and what it looks like going forward. Okay, we'll keep it short and sweet today. Again, watch those initial claims coming out in about 2-3 minutes, and I will see everybody on the charts tomorrow. Have a great afternoon.